Cities once praised as booming markets are now bleeding equity like a busted dam. Families who bought at the peak are watching $70,000 to $150,000 in home value vanish overnight, while for sale signs rot like tombstones on suburban lawns. Insurance premiums are doubling, property taxes are suffocating, and foreclosure filings are climbing like it's 2008 on steroids. This isn't a slowdown, it's a full-blown housing massacre. Tonight, Discover the Nation counts down the top 10 worst cities to buy a home in 2025. Places where the crash isn't just coming, it's already here.
Number 10. Fort Worth, Texas. Fort Worth once carried the glow of Texas prosperity, but in 2025, it's starting to look like a financial sinkhole disguised as a housing market. Just 2 years ago, the median home price here hovered near $360,000. Today, buyers are staring at listings closer to $300,000, a staggering 17% decline in less than 24 months. For homeowners who locked in at the peak, that means tens of thousands in equity gone. But the inventory surge tells an even scarier story. Active listings in Fort Worth have jumped nearly 45% year over year. Houses that once sold in bidding wars within days now linger for 60, 90, even 120 days. The frenzy has turned into stagnation. Mortgage rates above 7% are hammering affordability, and the once booming new construction sector has turned into a graveyard of half-built subdivisions. Developers are offering shock discounts, $30,000, $40,000, even $50,000 off asking prices, plus free upgrades. But buyers aren't biting. Property taxes in Tarrant County are among the highest in Texas. A $350,000 home racks up more than $7,000 annually in taxes. Pair that with skyrocketing insurance premiums, especially in storm risk zones, and monthly payments have jumped by $500 to $700 compared to 2021 buyers. Families who stretch their budgets during the frenzy are quietly listing their homes, desperate to escape before the slide deepens. Investors who once banked on rental yields are fleeing too. Rents in Fort Worth have barely moved, averaging around $1,800 to $1,900, far below the true cost of ownership. That gap is forcing landlords into the red. The foreclosure pipeline is already swelling. Fort Worth's fall is a brutal reminder that even booming metros can collapse when affordability evaporates and oversupply collides with high costs. If this crash accelerates, Fort Worth may become a textbook case of how optimism turns into foreclosure notices overnight.
Number 9. Sacramento, California. Sacramento was once the affordable escape from Bay Area insanity, but in 2025, that dream has collapsed into a nightmare. Just 3 years ago, the median home price hovered near $525,000. Today, sellers are slashing into the $440,000, wiping out nearly $85,000 in value. A 16% drop has left thousands underwater. The investor-driven boom that fueled Sacramento is over. Active listings have surged 38% year over year. The average home now sits for 70 days before finding a buyer, compared to just 1 week back in 2021. Whole neighborhoods are lined with for sale signs that stand like gravestones of a market gone bust. Property taxes on a median home stack up to nearly $5,000 annually. Insurance, already weighed down by wildfire risk, has spiked more than 30%. Families who once budgeted $2,200 a month for mortgages are now staring at $3,000 to $3,200 payments. For middle-income buyers, Sacramento is simply out of reach. Investors are retreating fast. During the pandemic, they accounted for nearly a quarter of all purchases. Today, that's collapsed into single digits. Remote workers who fled San Francisco during 2020 are moving back or leaving California entirely. Rental investors are bleeding too. With average rents stuck near $1,700, landlords can't cover ballooning costs. The correction is tearing into the city's fabric. Construction projects are stalling mid-build. Builders who once promised thriving master-planned communities are now canceling contracts outright. Local businesses that depend on new homeowners, furniture stores, landscapers, contractors, are losing customers by the week. Sacramento's boom was built on migration and cheap money. Now both are gone, and what remains is a market gasping for air, teetering toward a collapse that could rival 2008.
Number 8. Jacksonville, Florida. Jacksonville once billed itself as Florida's hidden gem. By 2025, it's a polished disaster. In 2022, the median home price neared $350,000. Today, it has collapsed into the $290,000 range, an 18% plunge draining billions in homeowner equity. Oversupply is Jacksonville's curse. Between 2020 and 2023, builders unleashed thousands of new homes across sprawling subdivisions. Now, those very communities are littered with price-reduced signs. Discounts of $25,000 to $40,000 are standard, but inventory has ballooned to 6.5 months of supply, far beyond the threshold of a seller's market. And then there's insurance. Jacksonville sits in the heart of Florida's storm risk crisis. Premiums that once cost $2,500 annually now exceed $6,000. Property taxes pile on another $3,500, sending ownership costs spiraling. A buyer who budgeted $1,800 per month in 2021 is now staring at $2,800 to $3,000. For many, deals collapse at the closing table. Investors are retreating too. Average rents hover near $1,600, far below ownership costs. Airbnb hosts are suffering as occupancy rates dip below 50%. Flippers who banked on appreciation are unloading properties at steep losses. The human toll is mounting. Foreclosures are already up 20% year over year. Families who once believed they'd secured a piece of Florida's future are drowning under bills they can't afford. What was sold as Florida's hidden opportunity has turned into Florida's loudest warning. Oversupply plus skyrocketing insurance equals disaster.
Number 7. West Palm Beach, Florida. West Palm Beach once sparkled as a luxury playground. In 2025, it's becoming a battlefield where sellers lose ground daily. In 2022, the median home price topped $480,000. Today, it's fallen into the low $400,000s, a $70,000 loss in just 2 years. The collapse is sharpest in condos. HOA fees that once ran $500 a month now exceed $1,000. Surprise assessments of $20,000 to $40,000 for repairs have owners panicking. Retirees on fixed incomes simply can't keep up. Units that once sold in 10 days now rot on the market for 90. Insurance is the knockout punch. Premiums that once cost $3,500 annually now reach $7,000 to $8,000. Property taxes tack on another $5,500. Monthly carrying costs that averaged $2,200 in 2021 now sit closer to $3,600. The ripple effect is brutal. Rental markets aren't helping. Rents flat at $2,200 can't keep pace with ownership costs. Investors are bailing. Airbnb occupancy has plunged, and nightly rates are down 15%. Foreclosures across Palm Beach County are already up 22%. What was once paradise is now poison. West Palm Beach has transformed from glossy dream to ground zero of Florida's condo crisis, and the crash is still deepening.
Number 6. Houston, Texas. Houston used to wear affordability like a badge of honor. Not anymore. In 2022, the median home price hit $345,000. Today, it struggles to stay above $295,000. That 15% plunge has wiped billions in equity from homeowners who thought Houston was a safe bet. The city is drowning in supply. Active listings are up 42% year over year, with more than 30,000 homes sitting unsold across the metro. Developers who fueled the boom are now slashing $20,000 to $50,000 off asking prices, even offering free upgrades. But buyers aren't biting. Inventory rots for 90 days or more, turning brand new subdivisions into ghost rows of for sale signs. Taxes are punishing.
Houston's effective property tax rate of 2.1% makes a $300,000 home cost more than $6,000 annually in taxes alone. Flood insurance premiums that once averaged $1,200 now exceed $3,500 to $4,000. Monthly carrying costs that were $1,700 in 2021 have soared past $2,600 in 2025, locking thousands out of ownership. Rentals can't fill the gap. Average rents of $1,600 to $1,700 are far below ownership costs, leaving landlords trapped. Investors who once bragged that Houston was a cash flow machine are defaulting, many abandoning homes they can't afford to hold. The foreclosure machine is revving. Harris County filings are up 18%, with delinquency rates climbing quarter after quarter. Entire subdivisions on Houston's flood-prone edges are already turning into zones of forced sales where buyers walk away and banks take over. Houston's motto used to be, "Everything's bigger." In 2025, that includes its housing crash.
Number 5. Tampa, Florida. Tampa was Florida's pandemic darling, a Gulf Coast market that seemed unstoppable. In 2022, the median home price peaked near $410,000. By 2025, it's tumbling into the $350,000, a 12 to 15% correction that has erased every dollar of equity for buyers who jumped in at the top. Inventory is exploding. Tampa now sits on over 8 months of supply, compared to barely 1.5 months in 2021. Active listings are up 48% year over year, and thousands of homes sit unsold across Hillsborough and Pinellas counties. Days on market have stretched from under 10 to more than 75, and price-reduced banners are everywhere. Carrying costs are crushing. Property taxes on a $350,000 home top $4,800 annually. Insurance premiums run $5,500 to $7,000 thanks to hurricane risk and insurers fleeing Florida altogether. That means monthly payments of $2,800 to $3,200, up nearly 40% from 2021. For retirees on fixed incomes, Tampa has become financially toxic. Rents aren't helping. At around $2,000 a month, they don't cover ownership costs. Investor demand, once a quarter of Tampa sales, has collapsed. Airbnb hosts are dumping units as occupancy weakens. Foreclosures are already up 19%, and mortgage delinquencies are creeping higher each month. Tampa's postcard-perfect Gulf Coast dream is unraveling. For 2025 buyers, this isn't sunshine, it's a financial storm.
Number 4. Austin, Texas. Austin used to be America's golden child, the tech-powered boomtown that looked unstoppable. In 2022, the median home price soared above $550,000. By 2025, it's fallen to $470,000, a 15% loss that has wiped tens of thousands in equity from recent buyers. The supply glut is overwhelming. Inventory is up nearly 50% year over year. Homes that once sparked furious bidding wars now sit unsold for 90 days or longer, forcing sellers into brutal $30,000 to $60,000 price cuts. Developers who overbuilt during the boom are drowning in unsold inventory. Property taxes are crushing. At 2.2%, Travis County homeowners pay more than $10,000 annually on a median-priced home. Add $3,000 in insurance and today's mortgage rates, and monthly payments have jumped from $2,400 in 2021 to more than $3,500. That's a 45% increase with no wage growth to match. Investors are bailing out. During the pandemic, nearly 30% of Austin's sales were investor-driven. Now, flippers and landlords are dumping properties at losses. Rents stuck around $2,000 can't cover costs. Even tech workers, once the lifeblood of Austin's boom, are pulling back as layoffs ripple through the industry. Foreclosures are up 25%. Distressed sales are taking over the MLS. The city once hailed as unstoppable is quickly becoming a cautionary tale of oversupply, high costs, and a collapsing dream.
Number 3.
Santa Clarita, California. Santa Clarita, once marketed as the family-friendly refuge just north of Los Angeles, is now buckling under the weight of California's housing down. Back in 2022, the median home price pushed near $720,000. By 2025, that number has dropped into the mid-$610,000, a loss of more than $100,000 in equity that has stunned homeowners who believed this suburban stronghold was safe from collapse. The supply surge tells the story. Listings are up nearly 35% year over year, and homes that once sold within 2 weeks now sit unsold for 80 to 90 days. Price cuts are sweeping through the market, with sellers slashing tens of thousands to lure hesitant buyers. Some desperate owners are even offering concessions like covering $15,000 in closing costs, a sign of how fast demand has evaporated. Carrying costs have become punishing. Property taxes on a $620,000 home top $6,500 annually. Insurance premiums, already high due to Santa Clarita's proximity to wildfire-prone canyons, have surged past $3,000 a year. Monthly mortgage payments that were roughly $2,800 in 2021 now exceed $4,000 in 2025, a crushing blow for middle-income families who stretched budgets just to get in during the boom. Investors are retreating in droves. Rents stuck around $2,600 to $2,700 a month don't come close to covering carrying costs. Airbnbs that once thrived off family vacations and Six Flags tourism are sitting empty, leaving landlords underwater. Foreclosures in Los Angeles County have climbed nearly 20%, and Santa Clarita's once prized master plan communities are now dotted with distressed sales and short listings. The painful truth is clear. Santa Clarita's reputation as a safe suburban alternative has unraveled. The dream of trading Los Angeles chaos for a secure home in the hills is proving to be an illusion. What was once a symbol of stability is now turning into another cautionary tale of California's housing volatility, a graveyard for equity and optimism alike.
Number 2. Oakland, California. Oakland once carried the reputation of San Francisco's affordable sibling, the entry point for Bay Area buyers. In 2022, median home prices topped $820,000. By 2025, they've fallen to around $700,000, a staggering $110,000 wipeout that has gutted household wealth across the city. Listings have surged 50% across Alameda County. Homes that once sparked bidding wars in 48 hours now sit unsold for 95 days or longer. Nearly 40% of sellers have cut asking prices, and luxury units are seeing markdowns as steep as $200,000, a sign of just how fragile demand has become. Ownership costs are breaking backs. Property taxes on a $700,000 home exceed $8,000 annually, while insurance runs $3,500 or more in wildfire-prone or high-crime areas. Mortgage payments that once averaged $3,200 are now closer to $5,000. For most Bay Area families, that gap is simply unbridgeable. Investors are fleeing. Multifamily vacancies are climbing, and landlords are struggling with rising costs, flat rents stuck around $2,500, and tenant protections that cut into returns. Foreclosures are up 20%, and entire neighborhoods once marketed as up-and-coming are sliding back into decline. Oakland's affordability advantage has evaporated. Instead of being the Bay Area's gateway, it has become one of California's most vulnerable markets. The city is staring at a correction that could echo across the entire Bay, a reminder that even alternative metros are not immune when affordability collapses and confidence dies.
Number 1. Cape Coral, Florida. Cape Coral was the poster child of Florida's boomtown fantasy, where palm-lined streets and endless canals promised paradise. In 2022, the median home price neared $430,000. By 2025, it has collapsed into the $360,000s, a $70,000 loss that has left thousands of families underwater. The city is drowning in supply. Cape Coral now has more than 11 months of inventory, the highest in Florida. Homes that once sold in a week now languish unsold for 100-plus days. Nearly half of all listings show multiple price cuts, with desperate sellers offering free upgrades, cash incentives, and still failing to lure buyers. The killer, however, is insurance. After Hurricane Ian and escalating storm risks, premiums that once cost $3,000 annually now exceed $8,000 to $10,000. Property taxes add another $5,000 each year. A family that once paid $1,800 a month in 2021 is now shelling out closer to $3,500, nearly double in just 3 years. Many who thought they had secured paradise are now drowning financially, unable to keep roofs over their heads. Investors are abandoning ship. Rents of $2,100 don't come close to covering costs. Airbnb operators are folding as demand softens, leaving once booming vacation neighborhoods full of empty units. Foreclosures in Lee County are up 25%, the clearest signal that Cape Coral is not just cooling, it is imploding. The city that symbolized Florida's gold rush dream has become ground zero for the 2025 housing crash. Cape Coral is no longer a promise of sunshine and prosperity, it's America's nightmare in slow motion.
The collapse is here. From Texas to California to Florida, the American housing dream is cracking wide open. Prices are plunging, equity is vanishing, and ownership costs are suffocating families who thought they'd made it. This is more than a market correction. It's a generational turning point. And the question now is, if these cities can fall this hard, who's next? This is Discover the Nation. If you found this breakdown eye-opening, hit subscribe and turn on notifications, because the next housing collapse story is already unfolding, and we'll be here to expose it.